Afternoon everyone, I hope you're all doing well. In this video I'll be conducting a breakdown video on how I made 2% across two of my profits accounts, making me 4% over the start of April. Before I dive into the breakdown, I'd like to add one more thing. Moving forward, I'll be conducting more webinars of me talking, giving trade breakdowns rather than just sending my analysis. This is because it doesn't really explain what's going on or give that technical grasp of the trade you guys are looking for. But that's enough said, guys. Let's get into today's trade breakdown video. So the first thing I did when I dived into the charts this morning was identify when the London Open was, which for me, in my case, is 8 o'clock London time. And the close, normally it closes at 12, but I tend to notice that the volume really dies out at 10:30. Just mark that out. Yeah, so as you all can see, the London Open really has a lot of volume. Of course, you can trade the GBPJPY at Asia, but I don't really do it simply because it doesn't align with my timing schedule. But the first thing I noticed was there was a change in sentiment or change of character, as some of you guys know that as. It took place here, so that's when I started really looking for buys, simply because the market was respecting the bullish sentiment, as you can all see here. It was a clear indication for me that the price would continue in a bullish viewpoint, simply because we respected the trend here and we continue to respect it once again on the second break. So I zoomed into the smaller time frame and I started searching for my model. For those who aren't familiar with my model, it's simply a break of structure, liquidity sweep, another block tap, and we enter. I'm going to sketch out here just so you guys have that visual understanding of what it looks like. So basically what it is this is the price moving sideways. For the people that don't know what inducement is simply when the market just stalls by just moving up and down. Basically a battle between the buyers and the sellers. So what the market tends to do is it hunts all the stop losses. So simply, a lot of people would buy from here and they'll have the stop losses set here, and then a lot of sellers will do the opposite. They will sell and they will put the stop losses here. So the market tends to do is sweeps the stop losses, generating liquidity to fuel the move. And then what I simply do is I wait for a tap, liquidity sweep, and I enter. But I don't just enter by a tap. I never set limits. I usually wait for a reaction. So what I mean by that is, let me just zoom into the smaller time frame real quick. This was the liquidity I was referring to from this visual example. That's when I noticed that there was a lot of stop losses set here. Let me just fix this. This was my liquidity, and the order block I entered from was this one. Let me just fix that real quick. Yep, this was on the 1 minute, not also the 1 minute. It was also on the 3 and the 5 minute, as you guys can see here. This one here. So that was in confluence, as it was part of my model and my rules. So I waited for a reaction from my order block here. And then that's when I realized that the price was rejecting it numerous times before flying up to my intended direction. As you guys can see here, 1, 2, 3. We had 3 rejections at this order block. That was enough for me to execute buys. So what I did was I waited for a candle closure somewhere here, another candle just to be safe, and then my target was the Asian high. simply because it carries a lot of liquidity on top of the range and the bottom of it. So this was my target, and then I simply targeted a 1 to 2, and that's when I executed on multiple accounts, giving me 4%. I just want to say a quick disclaimer about this strategy. I strongly suggest everyone to backtest it and gather data on it, since it will substantially delay your progress and influence bad trading psychology if trading considerably. So what I mean by that is, a lot of people nowadays, they will just see a strategy and just trade it with the live account or with real capital or whatever you guys trade with. And I'm strongly against that, simply because I used to be one of those people, and it really stalled my progress, and it made me lose a lot of money. So I wouldn't want you guys going through what I went through. So what I would advise you guys to do is gather data on it and just backtest it. And once you're comfortable with the strategy itself, that's when you can probably trade it or forward test it using a demo account. And if you see lots of progress with it, then by all means, start trading it. Going to be it for me today, guys. I hope you found this video incredibly helpful, beneficial, and informative. And I'll see you guys at episode number 2.